I've been an advocate from the beginning of both silver and gold. I think it's important in a metals portfolio, just like in a stock portfolio, to diversify. You can even throw some platinum, palladium in your metals mix. The reason I think you're lacking if you have a gold-only portfolio is silver has so much more volatility but more upside potential. It's more volatile, so therefore when it does correct, it has further downside percentage-wise. But the reason I prefer silver over gold is the dynamics are better. The market is a lot smaller, so therefore again it's more volatile. But if you look at the gold market, a $5 move in the gold market represents about $5 billion. $5 billion would probably buy up the entire silver market, so it's very small. So any small market has a lot more potential to the upside. I mean, we can use an analogy. If you look at a mining company and you look at the junior mining companies that are very small and they make a big discovery, these stocks can go ballistic. They can go very, very high because they have small investor base, they have a low price, they have a low market cap. But once something happens to change that dynamic, you get a lot more people interested into this small float, the small market cap stock, and it will go higher and higher and higher. That's a pretty good representation for silver. Most people think of silver as an industrial-only metal, and now we're starting to see more and more new investors come into the market. All markets move based on buying and selling, as we know. And the real silver bugs, we might call them, are already in the silver market. I mean, everybody that's what I would consider a true silver bug got into the market before $20 US. But now you have a whole new set of investors that are willing to take a look at silver, and $20 or $25 as we're doing the interview, almost, I guess, over $25.50 today. We're looking at a bunch of new people that are saying, you know, what do I want? Do I want $25.50 silver or do I want $1,400 gold? And this is what I experienced for myself in the 70s to 1980 bull run, was that at some point, no one knows the exact number and it's different for each individual, that there's a time when the new investor, starts to say, geez, you know, I'd like to have a lot of gold, but that market's moved too far for me. Well, actually, silver's done better percentage-wise than gold from the beginning of the market, but they don't think that way unless they get out their calculator. They only think in real terms, and they think $1,400 gold or $25.50 silver, I'm going with silver. Then they possibly could find myself or Mike Maloney or some of the silver commentators out there and, you know, read my book or look at my website or any of these things, and then get really excited about silver and decide, you know, maybe, you know, I should buy more silver or whatever. So the dynamics are on a small market that they will go far higher, but also the corrections are more painful at times. So I've always favored it. I've always been kind of for the underdog. I consider that silver is the underdog metal. I also like it for the reasons outlined and one more, and that is the industrial side. It's sort of like a buyback program in a large cap stock or even a small stock, where the company has no better place to put their cash except to buy back their own stock because they know it's undervalued. That's a good analogy for the silver market. Even though it's not silver companies buying back their own silver, it's the industrial side that's buying silver regardless of the price, because silver is price inelastic on the demand side.